Hey everybody, how's it going? JT here, episode 118th for this July 25th, 2025. You are getting the Doots podcast. We're blasting out on 2 channels on X. If you got a chance, go ahead and like and retweet. That helps us out a bunch. We're also on YouTube. We're also on Twitch. And, of course, right here on the EV Mavericks Discord. And if you want to join along the discussion, you can find all of our links at dailydoots.com/podcast. So today we've got a very good special guest with us. It's Marco Mirabella. Marco Mirabella is he's the CEO for Ensuro. This is actually a friend and a guest of Logri the Bard. And Marco is on stage here on the Discord. We were trying to get his video side to work, but we're going to do it right here on Discord with the audio. So Marco, thank you so much for joining the call today. How you doing?
Yeah, thanks a lot for having me. It's a pleasure to be in here.
Thank you. Yeah. So I always like to ask our guests, not necessarily when did they get into crypto, but more like what was the galvanizing, like smart contract moment for you that had you kind of lean into Ensuro, and then we'll get into what is Ensuro.
Yeah, I was actually working for a VC fund in Taiwan quite a long time ago. And some of the portfolio companies of that fund were like a long Bitcoin holders. So essentially, like they gave me the idea like of kind of decentralization and like the value of money, like back around like 2015, 2016.
Oh,
and
good,
that
yeah.
idea like stayed with me, but I didn't actionalize it. But then like in 2017 with the kind of the craziness and like a lot of companies were starting to bring the idea of Ethereum and then like essentially like smart contracts. I started to like become really passionate about the space. So I decided to leave the job in the VC and then like start my own company in the blockchain space. That at that time was a layer 2 solution. So it started like 2017 as a off-chain compute, like a solution like a la Truebit, and then like in transition to like more optimistic roll-up. So that company I stayed at for 2 years and a half, and then like decided to do a little bit of Web2, timing Web2 for a price comparison website. But then I was suffering like because I could see the value like that the smart contracts and like overall cryptocurrency can bring to different industries, and I wasn't participating. So I decided to leave that Web2 job in a price comparison and started Ensuro around 4 years ago.
Fantastic. Go ahead. Sorry.
Yeah, no, what was fascinating for me, it's the democratization of finance that blockchain could bring. So essentially you could see like people coming from different places around the world that they were not having a bank account, but they could like mine it or mine Bitcoin and then immediately have access to the like a global financial system. And then with the idea of smart contracts, you get like a step a little further, and then you can program like money in a way that could replicate the traditional like financial system and giving them a boost. It was fascinating for me, and I had to be like in the front row for that.
Do you feel like Ethereum in particular turns 10 this week almost, right? In a few days. Do you feel like that the smart contract space, the thing that enamored you as a young company owner, do you feel like that in the last 10 years we've progressed faster than you thought or slower than you thought?
I think like a bit slower than I thought, to be honest. So in 2017 there was this craziness of like decentralize everything.
Yeah.
So that created like kind of like a very high expectation across the ecosystem. That like as always with a complex like technical like protocol like Ethereum, like they take a bit to come to fruition.
What was the Vitalik quote? The Vitalik quote is, "Have we earned it?" Back then, yeah.
There's also been Operation Choke Point 2.0.
Yeah.
Many years of regulatory suppression and scams and grift and everything else holding us back along the way.
Yeah, this is Logri the Bard. He's a technical interviewer for the Dudes podcast, chiming in. And anyway, I kind of cut you off, but yeah, this there's been a lot of regulatory oversight, at least from the U.S. side, but I think I heard you mention Taiwan. Are you still based in Taiwan? Is Ensuro based in Taiwan?
No, I spent like around 6 years in Taiwan, and now I'm moving to the other part of the world. So actually, I'm going to Argentina or moving to Argentina. And over there, like I did that choice also for like, driven by the blockchain space as well. So I was looking for a place where like real adoption is present.
Yeah.
And I think like Argentina is the place for that.
Oh, I've heard great things. Yeah, just widespread stablecoin usage, even for like point of sale, and even if people aren't touching the chain, they're using their Binance accounts to transfer transfer amongst each other without going through a bank. It's any of those hyperinflationary, local currencies tend to be fertile ground for the adoption of cryptocurrency in the local economy.
Yeah, absolutely. I'm seeing like people over there like. Using cuevas, there are like essentially like illegal, let's say, like money, like places to convert money, and all the people like are using crypto because it's much easier to operate and much cheaper than compared to traditional banks. And then I'm seeing, I like to travel like in emerging markets, like so I spent quite a bit of time in Southeast Asia. I was recently in Africa, in Kenya. So and we were doing like a project in Nigeria, for instance. Like I have a lot of friends from Venezuela. Crypto over there is changing life. So once you go in these places, like the energy you can feel, it's unbelievable.
Yeah,
so,
and you get the same vibe in any major conference you go to. You're like, oh my god, this is so much. Like I just belong here, so much more than crypto Twitter, right? Or the daily cesspool of people complaining. So I'd like to talk about Ensuro. Let's see. We obviously insurance, and maybe we should talk about what insurance looked like in 2020 or so. There was the first products there that looks styled like prediction markets, and then we can talk about how Ensuro is pushing the bar on that, and maybe what we think is where the product design for that is going for the ecosystem in the next cycle.
So some of the things that we're doing in Ensuro is essentially to focus on different markets compared to, let's say, like a Nexus Mutual or Insurace or like a Sherlock. So products that are focusing on Web3 risk. So we decided
from use Nexus Mutual because it's a miserable experience, frankly. Right?
Yeah, it was a kind of like a very very clunky. Like so it's like a different type of steps, and then like always
variable rates, weird subjective consensus oracles that you don't understand, that adjudicate, the claims assessor basically. It rehypothecation in ways that people don't really understand. Highly illiquid token, the NXM token. I think it's still the case. You can't just transfer it unless it's to a whitelisted wallet, right? So just a lot of UX pain across the board, and anytime I've tried to touch that.
Yeah, that one was kind of like the legal structure that they have, like kind of limited them to extend the functionalities of the token. So they're using a system, like a legal infrastructure, like a legal structure called discretionary mutual fund. And this discretionary mutual fund forces them to have a discretion on the claim than they do with a token voting system. So it's kind of like they had to figure out that strategy from the beginning in order to operate in a highly regulated market as a insurance, but that comes with a UX and UI UX burdens. Anyway, and around that time, there's been a development of companies focusing on smart contract risk, and almost nothing focusing on the Web2 risk. So what I was thinking in my head before starting Ensuro is essentially the possibility of bringing these two worlds. So bringing the efficiency of smart contracts and then to a traditional market like insurance, and then insuring to or off-chain type of risks. And then the lowest hanging fruit that we decided to focus on is a particular set of products that is called parametric insurance. This is essentially is a type of products where the trigger is well defined, and it almost works and it's a binary input. So either you have a certain amount of rain or not, and the policy is triggered, or a flight is delayed more than X amount of hours, and the policy is triggered or not. So in that case, you can automate the entire flow because you can leverage like the use of oracles, and then you can lock the capitals on the smart contracts. So we took that idea, and then and the idea that each time you sign an insurance contract, essentially like, it can be converted into a smart contract in ideal world. So we try to push that boundary and started Ensuro around 4 years ago.
If we're going to look at, I'm just playing around on the app here, and looks like when you come to the front page, you have two tranches here: investors and companies. Do you want to walk us through one or the other?
That's not the same as tranches, right? So they have two different user groups. Like
groups.
It's a marketplace, right? It's a marketplace. They have two different types of users. You have the people that are trying to buy a policy. This would be the person that's buying their car insurance or whatever. And then there's the people that are providing the capital. That would pay out if something happens, right? There's probably a third set in here. I don't know how they're incentivized. I was planning to ask about how the claims assessor, how the claims adjuster process work, what the underwriting, information is, in addition to the tranching system that I see. But let's let Marco take it away.
So essentially, like we have two groups. So one side you have the liquidity providers, on the other side, you have the companies that then provide protection or insurance products to the final consumers. So one of the things that we noticed since the beginning of the company is that we couldn't do everything. So we had to leverage other companies in order to distribute these insurance products. And then the distribution of the insurance product is through channels that are in the Web2 space. So the final consumer that is purchasing the protection or the insurance actually doesn't even know there is a Web3 company at the back. So we partner with different companies, let's say Spot. There is a US company that's providing cancellation for any reason in the travel space, or Autonomy that's providing cargo insurance for maritime or airplanes. And then we provide the underwriting capacity in the form of USDC, and this underwriting capacity comes from different investors that decides to connect their wallet and then deploy USDC. Now, in terms of the tranching system, there's a junior tranche that is risk specific. So each one of the partners has its own junior tranche, but then we have a senior tranche that sits at the top. So in case the losses of the junior pool are higher than expected, then we start to impact the senior tranche. There is also a tranche that is shared across the entire portfolio. And this mirrors
Is the underwriting of this done by the Ensuro team? So usually underwriting is something that would set a rate. So you'd say we've looked at you and you're a safe driver, and so your cost for your car insurance is whatever a month. And they would try to also, as a portfolio, distribute the risk of possible events so that if everyone's car is insured in the same city and then a hailstorm hits the city, right, you get really big problems in insurance systems. So the other thing that underwriters do is they try to look at the systemic risk on the portfolio. So that's not just a matter of I'm going to deposit some USDC or the market's going to find a rate. How are the rates set for the people buying coverage in order to have an intelligent evaluation of those risks?
Yeah, so in this type of process, we have our team of our team of underwriters, our quant team, that then talks with the different type of businesses and then takes historical data in order to then set the rate of the product. And it's also then...
so does your team. It's not a decentralized aspect.
At the moment, yes. So for most of the product that we launch, we have a team of quant that analyze the product. So we have instances in which we give a more freedom to the company itself to set up the prices, but I mean the highest majority it's our team that is doing that. And it's also we realize that
I'm just trying to understand.
It's something that we are pushing in order to kind of decentralize, because it can be one of the bottleneck of the growth of a company like ours. So centralizing the underwriting process then means that we have a certain bottleneck in the number of companies that we can analyze.
There used to be Melonport. Are you familiar with that design? It's an old DeFi.
Oh my gosh, yeah, Melon's classic.
Yeah, do you remember this one, Marco? You've been around long enough.
Yeah, Melon, they rebranded with Enzyme, right? Is that the one?
Ago.
Okay. Yep.
So they have this design where basically where your team would sit as a kind of centralized unit right now, you had a bunch of different shops, and basically they just attached reputational, like historical data that said, look, here's this person's portfolios, and you don't just invest in like car insurance, you invest in car insurance through a specific underwriter shop, right? And so you just make your team one of many if you want to, right?
Yeah, it's something like I mean, we're seeing like also like let's say Morpho or Euler, where you have the different type of curators. So it's a discussion that we're having like in the team at the moment as a way to kind of like decentralize or like remove the centralization in the writing process. But then you always need to have a balance in terms of the reputation or the skills of the different type of people that look at the portfolio. So an idea like the grader with the reputation system, it's something that could work for our model. But it's we're getting there. So step by step, we're trying to solve like.
I was just curious how that would affect the tranching. So there'd be a whole different tranching system for each underwriting shop. Would you have different deposit pools at that point for each of the underwriting shops? Like would it be like each of these underwriting shops would stake in order to have a percentage of the portfolio that they can use for the insurance pool? Would it have a single pool and then it'd be like distributed by a pie chart to all those different shops? Or do you want would it be the users underwriting the risk at the end of the day, or would it be the governance underwriting the risk, or would it be basically some type of algorithmic assessment that you would put on chain?
Yeah, so we have one of these systems already in place where the division of the junior tranche and the senior tranche is done like with a value at risk type of analysis. So we take the distribution of the potential losses of the portfolio, we check like how the curve is defined, and now we set like let's say within var 50 that is the expected losses to var 70, like in the junior or var 80 in the junior pool, and then like all the tail like remains in the senior pool. So essentially like all the losses that are more than unexpected, so almost catastrophic, and those are the ones that are covered by the senior pool. And then one of the things that
how do you determine the ratio between the junior and the senior pool? I understand you have to reserve a certain amount in the senior pool for the total at risk or some notion of that, right? But how do you determine the ratio of the junior to senior?
Yeah, essentially like what you do like when you analyze a portfolio is that you check the loss probability. So how the loss probability curve is shaped, and then based on that you have a calculation of something called value at risk. That is essentially like you start to simulate different scenarios, and you check what is the expectancy of this scenario, how these scenarios are expected to be like in their showing. And then like you have, let's say, the var 50, so a value at risk 50, that it represents the expected policies, and generally these are covered by the premium. So once you purchase an insurance policy, the premium that you pay generally covers for the expected losses. So you need to take the expected probability multiplied by the exposure, or the payout you're expecting to receive. So that's the minimum like that an insurance needs to charge you. And then on top of that, an insurance.
How much of that information that you're using to make these decisions is on chain or public or available versus just reflected in like a governance defined parameter?
Yeah, in terms of all the finance like related information of the policy, in the sense of the premium received, the exposure of the policy, and the loss probability attached to the specific policy, it's is on chain. All the private information related to the channels, so let's say like the clients of our clients, it's something that we don't expose on chain, but we put on the back end. So if you enter, and we're creating different type of Dune analytics, where like a user can check all these type of metrics in real time.
Okay, so that's the function of the system. Let's talk about a few things of what is the benefit of this, because this sounds very much like it's a traditional insurance firm, but rather than having, the traditional insurance firm has its own capital, has its own like treasury that's using, like, if you have State Farm or something, it's State Farm's money that's actually insuring. Here you're decentralizing where the source of the money is that it would do payouts, and you're socializing the yield from that. And because it's more democratic, you can kind of eke into some of the profit margins from the larger, more centralized providers, right? Because you basically can get a fairer risk rate on capital than they can, right? They're hoarding this in a kind of centralized way, and you can open this up to a wider market, and so you're going to be able to get capital at a lower rate, and that means you're going to be able to offer better policy and hopefully grow quite quickly. The claims assessment is still being done by the insurance company in this case, right? Like your claims assessors are the ones deciding whether a payout happens.
Yeah, we tend to focus on products that are called parametric, where the trigger of the policy is very binary. So
Well,
let's say in the case of
decided by whom, right? Like binary, sure, but still something has to write that to the chain. There has to be an oracle to the chain, and that oracle is still your team, right?
Yeah, at the moment, actually, we rely on the claim team of the partners, and then we do check in place. We had we try at the beginning to use chain link oracles, like especially for flight delays or cargo delays. So in the sense, like you take like a flight aware information, and then you take this data and then you use it to trigger a policy. So it's a balance within the two. So there's an aspiration to do everything on chain, so with all the different oracles. However,
you would
when
use
we
some
talk
like
with
a UMA oracle, or you do something like there's another team we had on here called Scenario, where it's like notify me if something happens, right? So you could use something like that in order to be the trigger for the insurance, at least a review of the a secondary check of the claims assessment process, right?
So in some of the products we have we've got asked by clients to do a double check of the policies. However, we're pushing this a bit further. So for a product that we launched in Kenya, we're partnering up with a company called WeatherXM. So that is an IoT provider that provides a different type of weather stations and where the weather data are stored on IPFS. And then we are using them in order to trigger the policies that are based on a weather event. So if you have a certain drought, you check the level of rainfalls for a specific location, and then you trigger the policy based on that. Now, the issue with the type of product is that we need to deploy the stations, so in the different places that we're willing to cover. And when you deploy the station, then you need to calibrate the model in a way that you account for that localization. So if you want to, let's say, train a specific location in Kenya, you need to train the model with historical data coming from satellite that are quite coarse. So you're taking a grid that it's large. But then if you place a weather sensor, then the weather sensor will be on top of a hill or on a valley, and that can kind of ruin the model. So we need to calibrate the model in a way that counts that, and it's kind of an issue.
There's you say it's binary, but these things always have kind of a gray area, right? And there can always be some kind of dispute. There was a famous contested market recently on Polymarket, which was like whether President Zelensky, would wear a suit before the end of the year. And there's a picture of him wearing something that's kind of a suit, but kind of not, right? Sounds very binary, but actually got really, really hotly contested. Because these things are never truly binary, right? There's always some gray area and some opinionation. So yeah, one thing that decentralized insurance can improve is when we want to second guess these things in order to be fair, we can remove the power from State Farm's hands to decide whether the event happened, and at least put it into a reasonable jury of our peers, right? In order to decide whether some event happened and the trigger is fair, right?
Yeah, one project that I really like that it's kind of working on this problem is Claros. I don't know if you guys came across them. So they have a decentralized court system. So then they have a system for claim adjudications that have different type of levels. So people can appeal to the different levels, and the stakes increase until a decision is made.
Yep. I've seen hierarchical designs. Colony had something similar to that actually as well before they went out, where you have this as it rises up the hierarchy, you tend to stop talking about more technical matters and you start talking about things like corruption, or right, it becomes a more values-based thing as it rises up the org. It becomes more at the bottom levels, things tend to be more objective. It tends to be more technical skill type of thing. And at the top, it tends to be more cultural. tends to be more like this is a matter of corruption, or we're doing this value or optimizing for this instead of that, right? The nature of the conversation changes as you go up the tree.
Yeah, that project, it's I mean, like you're seeing some of the disputes that are, they get like quite subjective. The metrics that are using are like getting more and more like difficult to objectivize. But the good thing about that company that I really like is that they have a use case in like in the Web2 space. So once you like one of the biggest like crypto card provider in Argentina and across like Latin America, it's a company called Lemon. So they have like I think like more than a couple of million of users at the moment. And once you do like a dispute on the card, that dispute goes on Claros. So you're using that, and then it gets like a traditional like financial institution does the dispute resolution on Claros, which is a team, by the way, in Argentina, and it's something like, I mean, we see all these problems, but it's kind of like it's something that we want to get there, but it's the idea is to reach a certain strong like value proposition for the user, start to decentralize as we go, because centralization sometimes like create like bottlenecks in growth. But we like the path there, like it's slower than I expected before starting Ensuro.
Sure. I'd like to talk a little bit about I know you have your model here, and we talked a little about how you might change that model to decentralize the claims assessor process, to decentralize the underwriting process going forward. The last step of this is kind of like rate discovery and tokenization. So when people buy a policy through you, do they have a predictable APR or a predictable yearly cost in that policy, or is it subject to market forces?
Yeah, at the moment, like the APR is something that we set beforehand for a specific type of product. So once you deploy like funds, let's say on the junior pool or the senior pool, you know beforehand like what is the component, like so the interest rate that we charge when we lock the capital for the solvency, and that gets add up to the asset management protocol that we plug into Ensuro. So when the funds are in the junior pool, they immediately get reinvested into Compound Blue, Aave, and Open Eden, like right now we are implementing.
Okay,
so you get like
idle funds are at least, the equivalent to farming in DeFi, right? You're not just having raw USDC there with an opportunity cost of whatever the market rate for yield is. It's at least like being directed over to Aave or something, so you're earning market rate while it's idle.
Yeah, actually, like not only idle, but the funds that we're using to back up the products are split across the different protocols. So we have a vault system, and then the vault like invest in the different funds.
I wonder if
not
you could use a decent yield aggregator for that. We've seen a bunch of them. We had Summerfi on the podcast recently. They're a yield aggregator. There's Yo's yield optimizers, an aggregator. Tokenmax yield aggregator. Even Yearn V3 is an aggregator, right? So how much of the liquidity farming skill do you want to be your core job, as opposed to outsource that to any of the teams that can just say like, hey, deposit USDC here, and we will go and scout out a good risk adjusted rate of return, right?
Yeah, this is a balance that one of the things I haven't mentioned about Ensuro is that we are a regulated entity in Bermuda. So we're trying to push the boundaries on both ends. So the Bermuda Monetary Authority gave us the license to do this model. So putting insurance in. Oh, thank you. There's been a journey of like 3 years, kind of like presenting Ensuro like as a solution, like in a public blockchain where all the funds like were in a non-custodial. And then like each time like we change the asset management, like we need to kind of notify the regulators and then like make like a statement that this has been done, and then like the regulator approves or not the asset management. So we had to go and pitch them like 3 years ago, like Aave, and while we were thinking like Aave was a good solution for us, and then Compound, and then I mean right now with the tokenized treasuries, like it's a bit of a easier job, but it's there's always this balance in Ensuro where we try to push on DeFi, but we also like have to.
So for every DeFi protocol you're going to use, you basically have to go get government approval, is what you're saying, and so you can't really just wipe your hands of it or wash your hands of it by handing it over to a yield optimizer protocol.
That's correct. So we need to like have a risk assessment and then check that the protocol has been around for long, and then has been audited like by multiple firms, and then create a case for the regulator. That is also, I mean, the regulations slows a bit the innovation, but financial like institution is something that I mean, give us a mark of approval that say like I can convince institutional investors to jump on board.
All right. Well, that's just another opinion your team is forced to take on what risks the people depositing are taking. Right now, ironically, the money that's in Aave has its own form of insurance, right? and it's oh boy, that's a doozy. They're not using something like Nexus Mutual, right? They have an STK Aave system, and they have their own sort of like it's backed by the Aave token in some sense if there are bad debts.
Yeah, they changed this safety model recently. So
Oh
initially they were like using Aave token as a kind of like ultimate like security
resort,
like
yeah.
measure. Yeah, last resort. Recently they released a new type of system where like users are staking like USDC and then getting like an incremental year to the rates of Aave for like taking the risk in case anything.
Thank God, because that you think you have a certain amount of money in your insurance pool, and it's nominated in Aave, and when the hack happens, I guarantee you're not going to have that much money anymore, right? The Aave token price plunges 40%. Where's your insurance now, right? So yes, hats off to them for making those adjustments. It's been a few years in coming. I know they've been cooking on that for a while. Good to hear. If you were to, how is that so in terms of on-chain sort of DeFi insurance? I know that's not Ensuro's focus, but we just talked about how Aave is doing it, right? That was supposed to be what Nexus Mutual was for, but Nexus Mutual is just a miserable experience to work with for everyone, right? Variable rates for the people borrowing it, rehypothecation that you can't really control as the person buying the policy. As you said, the regulation sort of issues. We've had other approaches for insurance markets that look like prediction markets. You set up a like, will this go wrong by the end of the year type of market on poly market. And you sell like a yes, no, and invalid token, and then the market kind of figures it out. And that is a miserable experience, right? that does not get traction. What do you think the shape of on-chain insured DeFi is going to be by 4 years from now in the next cycle, right? Because this is something that TradFi, if they're going to have like bank deposits coming on chain, they're going to demand insurance on that, right? And it'd be a shame if it went over to Lloyd's of London as opposed to some DeFi protocol because we couldn't figure out our UX and figure out a traditional packaging of this that would be palatable to them.
Yeah, like I mean, one like a solution that like the market is taking is the Lloyd's of London. So they have like native, for instance, is a like managing general agent or a cover order that then partners up with Lloyd's to then do like crypto risk, smart contract hacks or depegging. But I totally agree with you. So we need to figure out like a way to have DeFi take that and don't outsource it to a traditional financial institution as old as Lloyd. I mean, I did like one.
Well, I don't care if it's as old as Lloyd's. I'm just saying I would prefer if we had DeFi and we have our DeFi positions, and now we're bringing on TradFi money, and we're going to get, Scott Bessent says that stablecoins are going to go to 4 trillion. So we've got all that. We'll have 4 trillion stablecoins on chain, presumably pumped into DeFi, and rates will normalize down. But in order to really get a lot of that bulk, right, we have to get basically insurance on DeFi positions. And I think that a lot of people, not just banks, even existing DeFi users, would love to have a sort of I've described as a wrapped position. Like take your convex LP or whatever position and deposit it into this insurance wrapper, and you get an insured wrapped token and output that splits the yield or somehow subtracts the cost of insurance and the profit, right? And something that just says like, here's my token, right? And this thing is a yield bearing and insured position, and like I don't have to worry about it at that point, right?
Yeah, that one is like I think Open Cover, like if I'm not mistaken, it's like was trying to go to that direction. I did like one project for a hackathon, like in Bogota for DEF CON, like where essentially like I was trying to aggregate the risk of multiple products under the form of a mutual fund. And then different products like they were using like all the different governance tokens and pulling it together into an index. So similar like to the GLP token of GMX. And then this index was covering the risk in case one of the protocols inside the mutual like were hacked. So in that case, you have a risk sharing across like blue chip like protocols, reducing like the overall like exposure to any of them. And then in case there's a hack in one protocol, I mean, you have the value of the DeFi ecosystem generally like goes lower, but it doesn't go as low as in the case, let's say, in the safety model of Aave. So getting insured by Aave tokens in case of something happens.
Aave is through their insurance protocol that we just described. They've basically tightly coupled the Aave, like the USDC token that you get. That is inherently kind of insured, right? They don't actually have a non-insured token, option, right? So it's built into the protocol in a way that it's non-discretionary. But DeFi likes composability, likes modularity. So if there was a uninsured option, and then you could wrap that in an insurance option, like I just looked at OpenCover, and it looks to me like it's another one of those things where you buy a policy, right? So you'd say like, oh, I've got my beefy position. Now I'm going to buy a beefy cover position, right? That is like an NFT or something. But it's not part of the actual token, right? It's not a wrapper around it. And so financially, that has like tax implications and cost implications, and all kind of bookkeeping annoyances. There's no guarantee that the rate that I'm paying on is going to be more than the amount that I'm earning on the position. It's still just a headache, right? Compared to, I just want the equivalent of what Aave has, which is like, sometimes I'd like to be able to take my convex position or my BP position and just make it an insured wrapped thing, right? Which is basically what
I think in order for like this like solution to work, you need to kind of embed the coverage within the system, and to do that, probably it should be like not a decision of the final consumer, it's more a decision at the protocol level. So that's why I was in the project.
I think you could probably have, I think the process of insuring the protocol or insuring the position can be separate from the yield source of that, right? So like I could see how you could take a wrapped convex, let's say we have an IN prefix, we have an IN CVX CRV, token that is now an insured version against smart contract hacks or other things, right? And they could take maybe like 20% of the yield or something, some agreeable thing. I could see how you could, just like you don't have to have, insurance as part of inherent in the weather system in order to figure out like how to insure against hail, right? I don't think I have to have insurance inherent in the Aave system to figure out how to insure an Aave system. I think those can be separable things, and we like composability. So we'd like to be able to have a mechanism that could do this for all the DeFi protocols rather than having to go protocol by protocol and go through governance and figure out, one by one with a sort of tangled mess of solutions that are inconsistent across the industry for how to ensure a yield source, right? I think that there would be value in having a composable insurance on top of a general DeFi wrapper type of system that can wrap a yield source and in an understandable way ensure the position, right? In a way that the fees are clear and the process has all the benefits of decentralization. So the claims assessor isn't part of the insurance process, and all the other things we talked about could be brought as benefits to that as well.
So you're saying like let's say I put funds in one protocol, then I get the accounting token of that protocol, and then
you get your MIR token for beefy, right? And then you take that to insurance protocol and you deposit it, right? And when you deposit it, you would essentially be buying a position. So you can use the yield of the DeFi protocol to pay for the insurance, as opposed to having to buy an insurance policy separate from that token, which is how OpenCover works or Nexus Mutual works.
Yeah, that's I discussed with the beefy like team like an idea like along those lines, but you need like you need someone to provide capital on the other side in order to cover like in case of a loss. The payment of the premium from interest rate is something that can be done, but then you need to incentivize the liquidity providers to, let's say, put USDC or other tokens on the
so
the
you're definitely gonna be forfeiting some of your yield. And to be clear, like Aave holders must be losing some of their yield somehow, right, in order to pay for the insurance on the AUSDC token. It's just kind of buried, right, in a way that isn't clear exactly what you're paying for insurance as opposed to paying for everything else in the Aave protocol, right? It's muddled because it's not modular, and there isn't a way of getting an Aave loan that's separated without the Aave protocol fee that's paying for the insurance effectively, right? So I think that you could do this. I think that
one of the issue there will be like how you determine the different rates of the different protocols. So essentially, how you do the underwriting protocol, but you can use
just
one
like
of the
you
idea
have
that
that,
it was
you have exactly that problem in Ensuro, right? What is the rate for car
correct.
insurance? What is the rate for a drought? What is, right? You have all of that problem, and we have to have underwriting systems. I'm not disputing that, right? But just like you have what I hope is a modular enough system that could bring in other underwriting teams that aren't Ensuro to handle different types of events that you don't have the quant specific skill for. I don't know, maybe it's on specific crops you don't understand yet, or maybe it's on technical risks of something that you don't understand. So if there are other quant teams out there that would like to provide insurance and they can make a market and find buyers, and you could add that into the Ensuro system, that would help you grow. And you said you're looking to do that in the next couple of years. I think that we need underwriters, we need claims assessors, like we need all the basic parts of the insurance system. We just also need a better form factor to the end user than I'm seeing through Nexus Mutual, through OpenCover, through Iron, the Iron Bank from Urine back in the day, or through Umbrella Protocol, or through, I already said Nexus Mutual, but like Ensuro, right? We'd like to get something that can ensure DeFi positions so that when all the institutions arrive, all the insurable proceeds of that don't leave the Web3 ecosystem and just literally go to Lloyd's of London because, they can, right? Like that's the one who can offer them a form factor to the bank to ensure their DeFi position that they find acceptable, because we can't crack the UX of this.
Yeah, one of the discussion that I had actually with one of the founder of Claros, that now I think like creating a prediction market, like was essentially using the prediction market as a way to set the rates of the different policies. So when you have like a situation where there's a high uncertainty in the premium definition, you can outsource that to the prediction market. The prediction market will bet on the different rate, and then those rates will be used for the insurance coverage. So in that case, like you saw one of the issue with the smart contracts hack, like coverage, is that there's no historical data. So you're using a finger in the air approach to understand like how to set the rate. In that case, like with a prediction market, you can have a bit more like a system that can be like a bit more efficient than that. So a lot of food for
we saw some of that back in the 2020 day. I think that was how, was it Umbrella? One of them worked that way. The problem is no one likes that form factor. No one's going to buy their own insurance through a form factor of buying I predict I get hacked token, right? That's not a form factor that customers buy. You need a wrapper in front of that. So it's fine if that's a back-end system somewhere. In the same way, it's fine if Claros is a back-end system somewhere, right? But the person buying insurance can't be exposed.
No, in the way that we were discussing on this idea is essentially to create a prediction market outside the insurance protocol, where like a user can bet on the different rate, and then once you arrive to like let's say like an output of that, you use that output as an input for the rates in the insurance protocol.
Oh,
so you
decouple the okay.
Yep,
you would use it as an algorithmic source of data for the underwriting process. Understood.
Correct. In that case, you can like kind of like you can use a prediction market that is a very good system to price in uncertainty, and then you use that as an input for the insurance.
Finance. And then I get it.
Hey, Marco, we got about 5 minutes till we hit the top of the hour. Are you good on time?
Yep. Yeah, I can go on. Like this is a very interesting.
Yeah. Well,
thanks a lot, guys.
I hope I'm picking your brain in ways that don't annoy you.
Yes.
Logri's quite the interviewer. He really understands like the money Lego society better than anyone I know for sure. So I was glad that Logri could be along the ride today. I have to ask you just a human interest a question, being in Argentina as of late. Have you ran across Mariano Conti and Patricio Wortalter at all?
Yeah, Mariano, like it's very involved with an initiative called Crecimiento.
Yep.
So Protocol Labs came to Argentina and Buenos Aires and then sponsored like a co-working space for 3 years, and they gave it to the community of builders in Argentina. So that's a very interesting space because like all the different builders get gathered there, and Mariano is like one of the people involved in that.
That's cool. That's neat. Yeah, I've met him.
And this year,
like times.
Dev Connect is gonna be in BA, so that's a good excuse to visit. But I'm originally from Italy, so I decided to move to Argentina because most of the team is there, most of our technical team, and also because like I needed that push, so it's like to kind of like understand why I was doing like crypto, why I was in crypto.
I love what's going on in Argentina. Necessity is the mother of invention, and when you've got a systematic, failing of the dollar in Argentinian the money system down there, and now crypto is like really changing things in a meaningful way, and you're really seeing so many projects just flourish out of there. It's very promising. It's really cool to kind of see all these things come together.
They had the Corralito back in 2008, I think. It's where the people were depositing in US dollars in the banks, and then suddenly the government took the US dollars and give them back pesos after the value. So there's a completely disengagement and mistrust of people in banks. And then that's what we need. It creates a void. Yeah, it creates a void for DeFi. And the same thing is happening in Bolivia, actually.
Oh, wow.
So Bolivia at the moment is going through a chaos. And I think that creates a void for crypto. So Lebanon is another place I'm interested in.
Turkey, yeah.
Turkey, Venezuela.
Anywhere you see the mass inflation, yeah.
It's kind of interesting just how quickly the dollarization with stable coins is taking place now. We'll see where it is even 2 years from now.
When the government gets out of its own way, it's
God, let the people do the thing, they don't have all the answers. We may not either, but damn it, people are hungry.
At least we're trying, right?
Yes. People
at least we're innovating. It might not always work first time. There might be 50 solutions and we have to pick the best one, but at least we're innovating.
Marco, what's next on the plate for Ensuro? Where are you going to be? I was cruising through your Twitter and kind of showing some pictures for the viewers out there watching the live stream. Where can we catch Ensuro in person? What's the next conference you guys are going to be at?
Yeah, we're definitely gonna be at DevCon in Buenos Aires. So that's a place where we want to have a presence and probably organize some insurance focused event. And then the idea is to continue to grow Ensuro and to make it relevant for that date. As a startup, there's up and downs. So
yeah,
we need to kind of go through that and continue building. So.
Do you think you'll make it stateside and go to ETH Denver?
Yeah, it's something when it's gonna be.
Usually late February, early March. I believe it's the last weekend of February or first weekend of March, somewhere in there. If you do,
it would be great to go catch up in person.
Yeah, I do barbecue out there every year. I smoke meat and take it I'm in Kansas City area, so I always like to meet the people in real life and give them a plate of food. So
that is a very good excuse to come down.
Book it. Yeah, last year I think I did 3 different events basically, so I smoked enough meat to feed probably about 150 people. across 3 different events, and some of it's sponsored, so I'm not out of pocket. It's fun. It's a drive though. It's 8 hours of the worst driving in the world, all the way across Kansas and eastern Colorado. It's like there's nothing, but I love going there every year, and the people are really fun, and there's always really killer side events, and I think it'd be fun to meet you in real life if possible.
Absolutely.
Logri, do you have anything else you want to ask? And Marco, if you want to give us any other information on Ensuro before we close out this portion of the live stream. But then we go on to the next step of the live stream, and you're welcome to stick around and be a color commentator. It's totally up to you. But any final thoughts before we move on?
No, I think it's very exciting what they're doing. I look forward to seeing all the decentralization improvements to it over time. I think they have a path forward to that. I think the insurance as an ecosystem has a very promising future within DeFi, right? For reasons that we stated, we can objectively improve the system for all users by disintermediating some things that are privileged roles that the insurance company shouldn't have, right? And in so doing, we can give the people we're buying cover a fair rate, and we can give them protections that they don't otherwise have. And that should be something that the entire world embraces. And I think Ensuro is a good pathway to it. You at least have a very good UX, which is more than I can say for most other DeFi insurance I'm seeing, as maybe a side effect of just to the degree that so much of what you're doing right now is centralized. You're able to get that focus on the UX first, and then hopefully work into the centralization over the years. But carry on. You have... I'll watch you with a keen eye.
Thanks a lot, and will be good to continue the conversation about the decentralized insurance model that we discussed here. I think there's
you have a lot of contact. Reach out. I'm happy to talk to you. It doesn't always have to be an interview.
Awesome. All right, guys.
Awesome.
Thank you.
Thank you. Marco Mirabella from Ensuro.co. So glad that you could join us and do an interview with us. But we're gonna switch gears over to our Daily Doots podcast, where I read Reddit, so you don't have to. Okay. So what's cool about
community content?
It's just community content straight off of Reddit. And Marco, the way it works is we've got a guy that scores the different comments that are in our daily thread every day, and then they end up on a rich list at dailydoots.com. If anybody wants to follow along, you just head right on over there, and you'll see that we have a leaderboard at the top. It is time. The Weekly Doots live stream is all about showcasing the best of the week from the ETH Finance daily general discussion on our Ethereum. And we're going to get right into it. Starting at number 10, Aiden Cairo's at 118. Ethical Trade tied at 118. JS Tears at 121. Crypto Wild Currency moving up the list at 122. Hani Abu 134. Tricky Troll 159. Benito 2030 at 175. Logri the Bard at 223. Super Fizz at 227. And Harog absolutely freaking smashing it again at the top of the leaderboard at 247. He had a triple doot day and a double doot day last week in the general discussion. So
he keeps bringing all the news, right? He's almost like our local reporter for the wider ecosystem, man.
Yeah.
So he just comes in with the news first and gives some context on it, and loves it, right? The community loves it.
Absolutely. Big thanks to Tricky Troll for getting all of these points assigned. And now we're going to do the Weekly Doots, the weekly roundups over here on the sidebar. I should go back because I think we got to get. Let's see, we have our calendar. Yeah, here it is. Need to do the calendar first. August 4th through the 6th, Berkeley Science and Blockchain Conference. Pragma, New York, and New York City on August 14th. ETH Global, New York, August 15th through the 17th. Lagos, Nigeria, August 28th. ETH Accra and Ghana, I believe, is 29th through the 31st. See, there's your African countries getting after it. It's awesome. September 4th through the 7th, Warsaw, ETH in Istanbul, in Turkey on the 5th through the 7th of September, ETH Safari. There's just so many things. Boston Blockchain Week is on. Yeah, it's cool. So freaking cool to see all these events taking place. What a crazy last couple of weeks, too. And, you know, the news begets more news. The price goes up and the narratives keep flying. And so are the events. All right, morning roundup. Frank the Tank chimes in. Ethereum user, I may be slow. That's my spirit animal right there. Price of 36.31. Alexis Kef at 0.31 on the ratio. Sorry, I'm having a hard time reading today. Weekly haiku courtesy of JS Tears. Tricky recover on the mend to discover. Pump is not over. Excellent. How does he do it, JS Tears? How do you do it? Every single day. It's amazing. And our ship post of the week, because we always like to save the best for first. What am I going to be doing here with this word? Damn it, a word. What is this word? Digital pneumonotremoscopic silicovolcanosis. Isn't this like the longest? That's like the longest word in the English language, right? Let's see if we can get the pronunciation of this word. Let's see. Google will play it. Here we go. Oh, shit. Let's see if it'll pick up on the... it's not playing. Let's go this way. I don't know if it's going to play.
4 years ago.
Yeah, it's not working. I'll be damned. Whatever. That's funny. Right. El Iter Elote shares their thoughts on the Coinbase announcement. El Iter Elote is a duder number 3 for this week. Listen to the Coinbase announcement. At first glance, I was reminded of a 2017-18 era consensus. The company threw an entire pot of spaghetti at the wall to see what would stick. That sounds about right. They had Ujo for music, Viant for supply chain, Celerius for collaborative storytelling, Uport and others for identity, Civil for news, AirSwap for DEX, Singularity TV, oh my gosh, I haven't heard that name in a long time, for media production, and more. What eventually stuck? MetaMask and Aztec, which was incubated at Consensus, if memory serves. Basically, everything else evaporated. Were they too early? Maybe. What do I know? All I know is that the majority of their projects failed. In the base announcement, creatives and developers described the work they were doing and how it was all enabled by base. It was awkward. And I found myself asking what people in the audience, most of whom were Coinbase employees, must have been thinking. Monetize social media likes? Is this what we've been building? Token curated registries that purport democratization, but in reality reinforce oligarchy through more tokens equals more votes. Is this good for society? Forget if we actually need this. We don't. But do we want this? In the last few years, we have seen social media take a dark turn. People have discovered if they can't create or inform, they can become infamous through negativity. People don't care if they're infamous as long as they're famous. Maybe I'm out of touch. Maybe I'm cynical. But I got into this space to disintermediate Uber, not to enrich Coinbase off Andrew Tate posts. The immediate monetization of likes and shares may start off well and good, but I am concerned that this is just another medium that will be captured. I see it like this. In the early internet and in the early crypto space, we had nerds, weirdos, libertarians, techno-optimists, and generally quality information. Today, the popular, the rich, and beautiful dominate the internet, promoting swirls of disinformation and algorithms built by the best and brightest see increasing the share of our waking lives we spend trapped inside of them as a profit opportunity. Consequences be damned. What used to be a wormhole of information and experience has become a shopping mall and a prison for dopamine addicts. I'm being dramatic, I know. I don't trust a company like Coinbase, beholden to stockholder interests at the core to usher in a phase of decentralization on the internet, or even just social media as they claim they will. I'm not even confident that their vision will even take off, considering the friction of getting people to swap apps and payment methods. 1% cash back on USDC purchases requires a user to open a centralized exchange account, upload identity docs, set up 2FA, connect to a bank account, deposit funds, and figure out how to send funds to a merchant. Versus just using their credit card, which likely pays at least 1% or more in cashback or points. Getting people to swap messaging apps is even more difficult, as a messaging network is only useful if you have people to message on it. It seems more likely that established messaging apps will build in these features, as opposed to new messaging apps with the features taking market share. Most people just aren't going to make the switch. Overall, I wasn't expecting anything profound, so I'm not disappointed. In terms of our bags, I suppose any increase in activity on chain is good for them. But as far as adding value to society, I don't know that this is the way. Thank you for coming to my TED Talk. That was a pretty banger post. I have to admit, because what's the old phrase? Blockchain is, looking for a problem it doesn't need to solve, or whatever the phrase is. I mean, you could say that about any technology. This to me sounds a lot like the early days of the internet. There's a famous clip of David Letterman when he's talking to Bill Gates about the internet, and it was like, Bill was basically saying something like, you'll be able to talk about baseball or watch the game on the internet or listen to it. And David Letterman is like, have you ever heard of a radio? And it's like, there's a point there, right? It took time. And I agree, the spaghetti being thrown against the wall, that 2017-18 era of consensus. Yeah. But, MetaMask is, for as much pain as it seems to bring people, a lot of people sure use it. I think sometimes these companies, they gotta try everything and hope something sticks. It's really hard to be an Apple, right, where you have such a clear vision that is undeniable and in the rearview mirror. That's pretty special, right? Same way with Amazon. Look how much Amazon suffered in the early years. I mean, suffered. I remember in college, before I dropped out the first time, I remember being out in the middle of nowhere in Kansas, down by Coffeyville, Kansas, and I'm just driving around in my pizza delivery station wagon. I was probably smoking funny things, and I came across this gigantic building out in the middle of nowhere, and it said Amazon book shipping fulfillment. And I'm like, how stupid is that, right? How incredibly stupid is this idea that people are going to want to go take the time to go on this internet website and buy used books? Like, just go to the bookstore, right? Short-sighted, right? And now look at it. It just takes a lot of time. Anyway, that's a really good, I love this long form writing that just very clearly makes some great points. So hats off to you, El Iter Elote. I've seen your username around for a long time, and I'm surprised you're only a duder number 3. Please keep posting, okay? Please keep posting. It's a banger. Thank you. User Etherbee gives thanks for the ETH Finance and Ethereum subreddit merge to help provide more signal for newcomers. Hey, that's sweet. Etherbee, yeah, long time OG. Duder number 20 for this week. I'm extremely grateful to the entire ETH Finance and Ethereum mod teams for facilitating the merge of the two subreddits in preparation for this next run. I can't even imagine the sheer volume of noise that beginners and curious newcomers would have had to wade through without it. Love you all. Thank you for making this space better for everyone. I tell you what, it was we came in like we were kind of thrown in all at once, and much to the chagrin of a couple of mods on our Ethereum side. But Evan Van Ness, hats off to you for getting it done. And I couldn't be happier with the way things have turned out. It's a mutual thanks also to the patrons of this community. The culture is established. The culture of being in the same room and talking to each other is the way to be online. And there's so much good demonstrative behavior. It makes the job easy for the mods. We deal with spam like you wouldn't believe. We have very few comment removals that we have to take care of due to decorum issues. So the mod team is one side of this coin, but it's the community, people like you, Etherb, people like Logri the Bard and Superfizz, the whole Doots team, all of the people that are in the daily on the regular. This, I should go back up to the leaderboard list here. I want you to look at this number right here, 1,232 Dooters. Of that, let's find out how many people have at least one. I wonder if I could come down here. So let's say the number of people that have at least two. You got to be around long enough. See, that's half of that number right there. 690 people have been on the list twice.
A long tail.
A long tail. Look at the number of people that have 10 or more. These are your people that are establishing the culture. If you're watching this on X and you don't have a Reddit account, get one specifically for our Ethereum. Okay? Give it, and if you've left Reddit for one reason or another, due to like the API thing, that's totally understandable, but do come back. The conversation is lively and it's wonderful. Okay, so thank you, Etherb, for shining a light on the community. As much as you did the mod teams, we're just the glorified custodians. Okay, the culture is established by the people over time, and we brought that spirit over from ETH Finance, and it carries on to today. Harag, there's the guy on the top of the leaderboard. Harag is 246 for this week. All right. Gives an update on Aztec's private roll-up testnet. I have not done any updates on Aztec. As a reminder, 2.5 months ago, they started the testnet of their privacy-preserving roll-up with permissionless validator sign-up. There has been an onslaught of people wanting to become node runners and validators as well. Validator sign-up is limited to 5 per day for the permissionless route. There are some validator slots through a proof of humanity approach, which they are testing at the moment, and there was also validator slots for selected members of the Discord group. At the moment, there are around 14,000 Aztec nodes running. It peaked at close to 20,000 nodes a few weeks ago. Most of them are running out of cheap data centers. For a comparison, I assume that Ethereum has somewhere between 10,000 to 30,000 nodes. Different sources have wildly different numbers. Actual validators for Aztec just broke 1,000 last week or so. Currently, there are 1,049 validators active. These are more validators than Solana has, with 998 validators. Also, the Solana numbers have been down only for 2 years, where Aztec is up only. The main reason so many people are running nodes on Aztec is that there might be an airdrop in the future, even though it is constantly denied by the team. Now that some alt L1 KOLs pivoted from distributed proof of stake to proof of governance, aka proof of authority, they will soon have to pivot to proof of airdrop, as this is obviously the fastest and cheapest way to decentralize, air quotes, a chain. Jokes aside, the Aztec testnet has been stable for over a month now. Good job. They just now mistakenly leaked the info that version 1 of their client will be released soon. This means it could be close to production ready. I expect them to have validator slashing in that release, which is essential and needs to be tested and improved for some time before the Aztec mainnet can start. Looks like a great few months ahead for privacy. Thank you, Harog. Logri the Bard, can you distill what Aztec is to our listeners?
Okay, so you have things like Tornado Cash, where you can put money in and then pull money out, and people can't trace the deposit to the withdrawal because there's a bunch of other people putting money in at the same time. These are commonly called mixers.
Mm-hmm.
Aztec basically sits as a mixer that allows you to also plug your money into DeFi. So in the same way you might have like a Gnosis safe that can go and plug money into Aave or something, while your money is in Aztec, you can go and have it plugged into these DeFi protocols, so you can basically control it like it's a smart contract wallet like Gnosis, but now it's private. So it's
that's neat.
Privacy. Yeah, right. And I'm giving you the layman's term. You can
that's good. No, I like it. That's really interesting. And then what kind of hardware requirements are required for running a node? Do you know?
Well, it's changing a lot because the nature of ZK technology and proofs is getting exponentially cheaper. Like, difference between 4 years ago and today on generating a ZK proof is just astronomical. So hardware for generating a ZK proof, I mean, your graphics, right? Like,
Excellent.
you'll do one eventually, right? It used to be that there's, at a technical level, there was a lot of sort of caching that you would do in order to get faster results, and that bloated the amount of VRAM that you would want. So basically, it was limited to these enterprise-grade systems with like 80 gigs of VRAM, but that's becoming less and less true over time.
Excellent. Thank you. Yeah, that's good. Hats off to the Aztec team. All right, moving on down the list. Rhythm of ETH explains how ETH's narrative has suddenly gone from seldom promoted and often attacked to firing on all cylinders. Rhythm of ETH this week is a deuter number 40. In simple terms, people related with Ethereum, such as the researchers and early adopter TradFi, they have been persecuted. Ethereum was quickly identified as the biggest risk to the financial establishment because it has the first mover advantage in actually revolutionizing how finance is done in the world. This means your biggest advocates, your biggest bag holders, have had an incentive to lay low and make little noise for very long. In the meantime, VC-backed L1s have run PSYOP campaigns and attempted to extract value from Ethereum, treating the crypto space as a zero-sum game and their space as a grifting machine. Well said. In the middle, you have a ton of influencers, crypto Twitter personalities, bloggers, and podcasters such as Bankless, riding this scenario by playing into VC money. And finally, Bitcoin, looming security budget, and miner operation viability issues continue to grow, while a few personalities, such as MicroStrategy, run the last grift towards the sunset. Oh, shit. What changed? Well, the pie is getting bigger. TradFi adoption is now inevitable. SEC prosecution has been dropped. This means that Ethereum main personalities are now more vocal and feel safe to do so, such as Lubin and Etherealize, and etc. Layer 1 VCs are sidelined. Crypto is no longer niche. They are not well positioned to capture the new value of the growing pie. Influencers now get to play along and gaslight us into thinking they never held altcoin bags and received incentives to run PSYOPs. Even more, now they hold ETH and they turn their signal into positive and bombard us with mindless bull noise. Bitcoin miners slowly start leaving the space and rotating towards ETH as a viable business. I guess that's the best summary that I can get of this perfect storm. The same stupid influencers think this will be another cycle. I can smell the sarcasm, which tells you they are looking for signs to rotate their bags again. This time might be different. Ethereum might exit the crypto cycle standard as it becomes full of real-world applications. Does this mean ETH price will go up? I don't know. What does it mean? Is that Ethereum is on its way to become the network for finance in this century. When I hear the cycle of crypto, the fact that ETH hasn't reached the previous all-time high tells me that cycle is broken. It's just not broken in the way we thought it would, right? So we're winning in every stinking narrative except for price if you're going to compare yourself to Bitcoin all the time. So, but boy, these times, them's are a changing, I feel. And I don't think it's ever going to be the same, ever. It's just incredible, the amount of... It's like you can't even catch your breath how much news has come down on the side of Ethereum. It's just been a long time coming. And yeah, it's nice to, I'll be honest, it's just nice to see people get spicy and have fun out there again. And it's like, just, we've worked at it this long and, you know, we ain't leaving. I'm not leaving. All right. Professor Strangelove explains how they used a ladder sell strategy to achieve a peace of mind and profits. Professor Strangelove this week is a deuter number 11. Well, for me, what worked well in 2021 was a laddered sell strategy. I wrote about it before. Here it is again. What was important to me was peace of mind. Regardless in which direction the price moves, this is crypto. It could drop 80% or it can do another 5x or whatever. and I wanted to lock in some profits since I went on the 2017 roller coaster without selling anything. Here's the columns. I made an Excel spreadsheet in 2021 with my price points, and these are the columns. You got the price point, the ETH left available to sell, the ETH to sell at this current price level, the value of ETH to sell at this price point in dollars, and so on. The total dollars sold, that's all the previous sales plus the current sell, and the total value of sold ETH plus unrealized gains at this price point. Then I played around with the numbers until I found a ladder sell strategy that I thought would give me peace of mind no matter where the price moved after a target hit. Best to do this before full FOMO and moon talk kicks in. Make a plan and stick to it. In the end, I did some rebuys during the bigger retraces during the bull run with some of the money I got from the sells, and then just readjusted the Excel. So yeah, you got to ladder buys as well as ladder sells. Good plan. Always have a good plan. User ETH2353 reports in on the Roman Storm Tornado Cash trial. User ETH2353 is a duder number 42. Yeah. Reporting back on Roman Storm's trial, the Tornado Cash developer, after this first week. Some quite incredible things have happened during this first week alone. The trial is expected to last 3 to 4 weeks. In my first message, I mentioned the following. The first witness is now on the stand from the prosecution side. A victim of a scammer sent $190,000 to a fake trading platform. Of course, Roman had nothing to do with the scam, but the scammer used Tornado Cash to hide their traces, unquote. It turns out the scammer in that case may not have used Tornado Cash at all. Credit to Taylor Monahan, there's an OG, from MetaMask. Taylor Monahan's from MetaMask. That was my crypto wallet. Anyway, who decided to look into the details of the first victim's testimony. So why was the victim on the stand? The victim, name is Katie Lynn, contacted a cryptocurrency recovery service called Payback. Quote, Lynn testified that after she was defrauded, a purported fraud recovery service instructed her to contact Tornado Cash about recovering her funds. The defense raised the issue of Lynn's evidentiary standing. Defense attorney David Patton claimed that, quote, we expected De Capua, that's the FBI special agent, to connect these flows to Tornado Cash, but that, based on his testimony on cross-examination, apparently he hasn't. What's also interesting is that the FBI actually seized Payback's website in September. The prosecution has responded by saying, quote, in response to defense skepticism, the government said it would rely on the work of a different blockchain tracing expert, IRS analysis Stephen George, to connect Lynn's funds to Tornado Cash. This would arrive, prosecutors proposed, in a supplemental disclosure to arrive soon. I was going to post a TLDR of the other days, but honestly, it's too hard to boil it down to a single comment, even a long one. If you're interested in this case, read the summarizing articles for each of the days here, and there's a link available. It's therage.co/tag/tornado hyphen. The URL is at dailydoots.com in this comment. It's basically what we expected, though. The government focuses on the victims of scammers, obviously not victims of Tornado Cash. Their expert witness, FBI agent De Capua, claims regular people would not use VPNs. What? The government has a witness testifying on the feasibility of implementing KYC AML, despite the developer no longer being charged with KYC AML violations. I'll keep you posted with further updates as the trial moves along. If you are in a position to support reporting on this case, I would ask you to support The Rage, who have honestly been the best source of information on this trial. They're an independent publication. Some of the quotes above are from their articles, and they post on Twitter about the case multiple times every day. I am not affiliated with them in any way. Great summary. Thank you.
What a clusterfuck.
I mean, throw it out. You know, throw that shit out. It's terrible.
It's a travesty.
It's terrible.
The rest of the government has already pivoted away from strategy of oppression, but he's just like caught in the fucking cogs of the machine at this point.
Yep.
Right?
Yep.
Like, exercising some free speech rights.
It's like a wrongfully imprisoned person having to wait 90 days to be released. Throw it out. It's done.
Yeah, it's I don't know. I think this could really linger on for a lot longer than 90 days.
Well, it sucks because it's this two-tiered judicial system where you got to have enough money. That's just, I don't know. I get fired up every time I read anything about this case because I'm like, am I in la land? Like it sounds made up.
About it it sounds like it was politically motivated to even start it.
Bingo.
And now whoever they appointed is incompetent. So there's not even a competent prosecution case.
Yeah, no, that's true.
And in the meantime, it's costing millions of dollars in legal fees to defend an obviously innocent person. There's just not even I guess we'll see. We'll see, but we'll see what the prosecution's case is. Because if their case is someone got scammed and the hacker ran away with money using Tornado Cash, okay, someone got shot. And are you going to prosecute the gun manufacturer?
Yeah, they try.
Right? Well, no, they don't. That's my point. There's a well-established law that you are not responsible for every application of your invention.
That's right. That's right.
That's well-established law. Now, if you make a car with a defective part and people start dying because of that, sure, you can win a lawsuit. But the product didn't work in a faulty way.
Right.
It worked as designed, right? And I just don't see the legal basis for coming after him for that on those grounds. But now they couldn't even find a person who got hacked.
and they were directing.
They couldn't tie the money even to Tornado Cash. It's just the incompetence on full display. Reveals it was never about. It was never about preventing harm. It was only ever about suppressing innovation in the crypto space.
Dude, they were interjecting and implicating Tornado Cash based off of the scammer, the fraud service mentioned to contact Tornado Cash, and that's how that got added to the case. So they took the word of the scammer. You know what I mean? Like, that's just nuts. I mean, the prosecution's basically leading
incompetence, just on full display,
trying to lead the narrative. I mean, it's like they took the scammer's word. The scammer was just scamming. He just picked out Tornado Cash, even though it
wasn't a scammer that said go and find them. A recovery service who contacted the police and said, I lost my money. And then the police are like, well, have you contacted a recovery service? And so she contacted the recovery service, and the recovery service said, yeah, why not try this?
Right.
And that's the best they could find.
Correct. Yeah.
That's the best that the prosecutor could find. They didn't come into this case with there's multiple $1 billion of high profile, obviously American citizens that have been affected. Let's go prevent further harm and try and shut this thing down. And furthermore, arresting Roman Storm doesn't shut down Tornado Cash, right? Even IFAC sanctioning doesn't shut down Tornado Cash, right? I guess they're kind of learning the hard way. These things, once released, can be forever. They can be immutable. They can be durable, whether the government likes it or not, right? So you have that, and so the only recourse they had is, well, then we have to stop at the head, which is let's go and suppress free speech,
right,
and fight innovation and arrest the developers so that they stop making this stuff.
Right,
and that might push it overseas at best, right? But it's still going to get made in Europe, in Argentina, in Lebanon, and wherever, right?
Right.
It's this stuff is inevitable, and censorship is a blade that's dulled by its ever use. So they can keep hacking away at this, but they're losing their own legitimacy. So, every court case is making them lose their own power.
So this section I was just talking about, the purported fraud recovery service, just to go back on this for a second. So she was scammed. She contacted a fraud recovery service. That part I understand. It was this addendum down here is that the FBI actually seized that recovery service's website in September of 2024. Right. So there is, we see this on our Ethereum, the mod team all the time is here's a common tactic is somebody will come in and make a post like, I can't find my coins anymore. Can someone please help? And that's
Yeah, I've seen that.
that's actually a disingenuous person that does that most of the time. Because what they're trying to do is the ring of scammers they'll have their sock puppets come in the comments and be like, oh, you can DM me, or there's a friend of mine on Telegram and his handle is this, that, or the other, and they're name dropping like all the different bullshit. It's all the same person, right?
Yeah, right.
And so the fraud recovery service is a big issue. And so anyway, yeah, that's enough on that. That's just, I feel so bad for him, man, because it's just like, that's a human in the middle of all this crap. And it doesn't need to be this way. It shouldn't be this way. And hopefully it gets thrown out soon. Like you said, they'll probably extend it as long as possible, because prosecutors hate losing. You know, the state hates looking stupid, and they got all the freaking taxpayer money they need to build up cases and just wreck people financially. It's like cancer. Justice system, insurance companies is all cancer. It sucks. All right. Some of it's good. Don't get me wrong, but most of it kind of sucks. Superfizz reminds us to champion decentralization as Ethereum enters the institutional space. Staking ought to be the neglected stepchild of Ethereum investment, but somehow it's the flagship tool. The flagship model ought to be something that faces outward and serves industry and humanity. Maybe not DeFi, but whatever the evolutionary successor to DeFi is. We thought that might be SoFi, social finance, but that doesn't seem to have materialized, at least yet. Staking doesn't inherently reward decentralization, even though that's the value driver of the network, and we haven't developed systems that can enforce decentralization. So when industry comes to stake to give yield to investors, they're not interested in strengthening the value proposition of the network through radical decentralization. They're just trying to turn a buck. I support and welcome industry in Ethereum, but we engage on terms that promote the value of the network, not only the value to detached investors. Ethereum is an infant with hundreds of years of growth ahead of it. We are the stewards who can actualize that growth. Know that Ethereum is permissionless, but that's not the same as lawless. We do establish protocol rules that promote the success of the network, and that is Superfizz. He is, I think, second to the top, third to the top on the leaderboard at 227 Doots for this week. It's always good to see Superfizz coming along into the daily. User Dan Archist makes the case for Ethereum to flip Bitcoin. Oh, I can only get so bullish. Duder number 2 coming in with the heat against Bitcoin. I'm ready for it. First, it's fringe corporate treasuries, then mainstream, then sovereign funds who want actual yield and not just speculation will find their way to it. They're encouraged by the fact that the world's biggest banks and retailers are on their way to issuing stablecoins on Ethereum in order to cut out the credit card cartels. This next part, I'm not super sure on. Fuzzy napkin math, and maybe someone can set me straight. Every one of those Walmart purchases made with WUSD will cost a bit of gas, a tiny amount, since they will happen on the Walmart layer 2, and they're batched and settled every 15 minutes on the Ethereum L1. Some gas, nevertheless. Imagine if a stablecoin transaction becomes just 10% of just Walmart's volume. That's 680.99 billion divided by 10 equals 68 billion annually. $500,000 like clockwork every 15 minutes settled on Ethereum. But instead of paying 2% of that to the credit card companies, Walmart instead pays a penny's worth of ETH per transaction. Assuming an average transaction of $50, then instead of paying $10,000 every 15 minutes to the credit card companies, Walmart just uses $100 worth of Ethereum. Annual spend on ETH would be just $3.5 million. The people they'd employ to manage that system would cost more than the system itself. In fact, at that point, they'd be buying and staking through enough Ethereum so as to have the staking yield offset the costs of settling all their transactions. Now, imagine a bank like Chase does it. But instead of still having to accept cash for 90% of their transactions, They're all in, and every transaction is using USDC behind the scenes. Will ETH flip Bitcoin? Who knows? People can keep irrationally buying what is essentially just a digital trading card for huge sums. But none of the above is possible on Bitcoin. Have a look at the R Bitcoin Markets Daily discussion thread. 98% of the comments are just about price. There's nothing happening on Bitcoin as a protocol. Hilariously, there's one comment about the possibility that Bitcoin gets tokenized through some MicroStrategy stock play, which will happen on Ethereum. Hell yeah. That's cool. I like posts like that. All right. User E2353 with the second Weekly Doots shares Peter's last talk on Ethereum, and user Epic Trader weighs in on the post. Did I have Epic Trader up here? No, that was Etherbeat. All right. I'm going to screw this thing. I never heard his name pronounced, so I won't even try. Peter, the former lead developer of Go Ethereum, or Geth, had a talk recently at ETH Cluj called Decentralization, Original Dream versus Shaping Reality. On Twitter, he says this is his last talk on Ethereum. He's moved on and is currently working on a project called Dark Bio. It has something to do with genomics, but I don't know too much about it. His talk was published today and is an interesting watch. He talks about the dangers of centralization, how the international payment system evolved over time into SWIFT and was eventually weaponized. But we probably don't want the same thing to happen to Ethereum. Similar to how democracy is not a given, and we need to actively defend it every day. Peter argues decentralization works the same way, and if we don't actively defend and work towards it, the natural tendency of any system will be to centralize. Epic Trader replies, Peter is unfortunately making a lot of claims that he knows is bullshit. And I think that's surprising and disappointing, but probably because he's feeling some degree of animosity towards Ethereum over the way things went and ended. He repeatedly presents accurate issues or natural progressions that leads to more centralization, but then falsely states as if we, or the EF, actively decided against decentralization to make things in that way. When he's talking about decisions made by market participants, completely ignoring that Ethereum is permissionless, and while the platform enables you to do anything you want, you can't and shouldn't force certain behaviors. For instance, when talking about mining and MEV, he states that miners are, quote, forced to use an MEV service and lost access to seeing transactions, unquote, which just isn't true. It's 100% true there's a financial pressure towards also participating in MEV, but no one was forced to do anything due to protocol design. He also states the 32 ETH stake was set to 32 because, quote, miners probably have $100,000 worth of mining equipment, so we can just use that as a baseline to determine the stake size, unquote. When in reality, this number was chosen due to overheads when aggregating and verifying signatures, and when the original number of stakers needed was expected to start at 1,500 before it would come down. And he's doing the same thing when talking about how he used to be able to mine on a Raspberry Pi and didn't have Etherscan and Ensuro, as if those were better days, and as if the advent of centralized offerings, which greatly improves ease or use and user experience, is somehow a bad thing, and actively decided upon new, more centralized path that makes it impossible to run your own node. It's a little tiring to listen to, and it takes away from his message. Wow, Epic Trader bringing some data. Gotta love it. Gotta love it. And finally for this week, all hail the Eternal Crab, Eternal POAP. Yes, excellent. We got a POAP. It's going to be expiring here pretty soon. Let's open it up here. If you want to get the POAP and grab it today, there's an airship. All you got to do is send 3 USD to this address right here. Okay? Eternal Crab. Yeah.
Just keep chugging. Just keep chugging. Just keep chugging.
I think I'm gonna buy one right now. How about it? I've already bought one. I'll buy another one. Oh yeah. I don't know if I have any USDC. Maybe I do. Let's see, I can do it on base. That's Polygon. Do I have any on base? Oh yeah, I sure do. All right, this is going to the Protocol Guild. I get a sweet POAP. I'm gonna give him 10 USDC.
Alec is a great mind, a great researcher, and by example, a great leader, but I've never seen him tell anybody to do anything.
Bingo. Booyah. Oh, hail the eternal crab. Excelente. All right. Well, let's wrap this up, guys. Appreciate everybody sticking around, smashing the bells. Glad you could join us on X, LinkedIn, Twitch, and of course the YouTubes. As always, stick around after the live stream because we continue the party in the hotel lobby on Discord for a bonus hour of popcorn. It's a great place to hang out when the parents aren't watching on YouTube. Hi, Mom. On behalf of the eFinance Daily General Discussion on our Ethereum and the EV Mavericks Discord, my name is JT. Cheers and big hugs from Kansas City.